Alright, so I've been trading a demo account and I just want to go over some lessons learned. I've been trading demo account for about a month, maybe a few weeks, and I've traded on all the different time frames. I've traded on the 1 minute, 5 minute, 15 minute, 30 minute. I'm not really patient enough to trade much on the hour. I've tried that, but typically I want to get in, and I'm kind of eager to get that money, right? So I'm not talking about longer time frames, but mostly 5 minute, pretty much. I've tried a lot with the 1 minute, and but mostly the 5 minute. Anyway, all right, some lessons learned. So, biggest lesson on the 1 minute is it's just big gains, big losses. Because what'll happen is you'll be in the red. When you buy, you start out in the red. So basically you buy, you're in the red. So you buy down here, and now you're just waiting, right? You're waiting. That's my crappy looking candle. You're waiting until you get finally up in the green. But it takes a while, right? And then basically what happens is, let's say you place a buy and sell at the same time. You click the buy button, you click the sell button. Well, your buy, let's say you do it for, I don't know, whatever, like certain, say you do it like one lot, or whatever you're doing, 5 lots, I don't know, whatever the thing is. But like this one will go automatically negative 90 up here, and then like whichever direction the market's moving, like I don't know, it could go up and down, up and down. Actually, I should probably and then hold on, up and down, and basically, depending on what it's doing, for example, your sell, actually I think I got it backwards. Yeah, no, your buy is, whatever, you get the point. One of your things is going to be like negative 90, and the other one's going to be like negative 10. And then as it moves down, so now your next period down here, let's say it makes a run down. Hopefully I'm doing this right. And then now your buy is like, you know, whatever, negative one. Now let's do, because it'll make more sense if I do negative 10 or whatever. Now this is like, this would be just 10, right? Or if this is negative, goes to negative 20 down here, say. Now this will be 20, right? Plus 20 up here. So, and then that could fluctuate. So what am I saying? I'm saying that the second that you put an order in, according to my observations, my experience, you are starting out with like whenever you place a trade, you start out with like, you know, I did 90 here, but it could be like 80 to 1 or whatever, like, or is that not 80 to 1, but like 8 to 1. I guess that'd make more sense. Whatever, 8 to 1. Maybe if I say it this way, this would be better. 80 to 90% chance, 80 to 90% chance, you know, basically like of just, how can I explain this? So basically, you place that trade, depending on if it goes up or down, you basically, the odds are basically against you like 80 or 90%, right? So what is that? I don't know, 8 to 1, 9 to 1. Basically odds against you. Okay, so you need to be really, really, really sure that you know what you're doing when you're putting real money in there. Okay, so I'm just gonna erase all this. Alright, and yeah, so whatever, we can leave that, I guess. But alright, so say you have your chart right here. Okay, I don't know, whatever. Alright, so say you got your little stochastic or whatever thing down here. This is doing its thing and it's going all crazy and doing whatever. The point is not that that's right, but you'll see. So, alright, I'm making it up as I go, according to my experience. Anyways, okay. So, alright, so what you want to do, alright, so say this point right here. This is a good, no, that's not good. This is, alright, so say you got, this is like your little dotted part for that stochastic oscillator. Alright, so say that's your point there that you're looking at, that it crossed. Now, You got all these candles, whatever, you know. Alright, boom. Now, you want to buy. So you see this. Now you want to buy. Alright, so let's say you buy right here. Okay? Boom. So that's one little bitty confirmation. Okay? So what you need are some other confirmations. And what you can do is use a lot of different things. But like, let's see, one of the things I've been doing is watching this real close. And then let me actually get my computer so I can make sure I'm saying it all right. Okay. So then what I have is I have different things. Okay. So I have this thing called time segmented volume, which I don't really have time in this video to explain what that is, but I watch that. Okay. And then, you know, I have an RSI on there. And then I also have this stuff. It's called, hold on. I have this thing called the market profile, which it shows you like the hot spots. You know, it'd be like that's a hot spot. And then it doesn't look like that, but sort of. And then it'll say, you know, that taper is off. But this is like the hot spot, right? So now I know when I'm trading this, basically if I get in here, then we start going up, well, guess where my take profit's going to be? Well, but I'm also looking for, like, I know I didn't really draw in, like, resistance too much, but let's just say there was a bunch of resistance right here. I know this is crappy, whatever. Anyway, that's my resistance. Anyway, say that this is like a really bad drawing, but whatever. Anyway, so I'm going to give myself some space between this and this to try and take that profit. I don't want to get greedy. But so what I'm looking at is different things, trying to get confirmations. Another thing I'm using is a 365 EMA. Okay, so then this thing will come and do that or whatever. And then I got a 180 EMA, and this thing will do that or whatever. So, but when this is, when the 180 is below the 365, I'm looking for a sell. I'm looking for a sell to sell. and I want this candles to be below, right? So if the red was up here and the green was down here, I want the candles down here. If the red is here and the green's above it, I want the candles up here. I want the candles, oh my gosh, I can't draw stuff. I want the candles up here, right? So that's how I want it. So for sell, red, blue, or red, green candles. For buy, I want the opposite direction, red, green candles, because this 180-day deviation going up is pushing the market up. This 180 deviation down is pushing the market down, right? Theoretically. Anyway, look, but also too, you don't want to get in too early. You don't want to get in too early. This is not where you want to get in. You want to get in up here. Now, you might say, it's too late. You got to watch what it's doing. If it takes off, first of all, if you don't get in here and it takes off, you missed it anyway. But if you get in here and it doesn't take off, which is more likely, if you get in here because it's too soon, because anything could happen. Just because it touches doesn't mean that it's going. But if you wait and let it start going up, if it starts going up slowly, this is why the higher time frames are better, like the 5 minute. I know that seems like not higher, but believe me, I was on the 1 minute for like 2 days or something, and the 5 minute is like slow compared to that. But anyways, yeah, so anyway, you start seeing it go slow, and now you know. Okay, I had the most trouble on the 1 minute. I had a little bit on the 5 minute. But hopefully this makes sense. But and then also have a 200 EMA, which supposedly, if the candles are above, it's supposed to be looking for a buy. Candles are below, supposed to be looking for a sell. And so anyway, and then I also have a 25 and a 25 and a 50, just to give me a little bit of what's going on. This 25, actually should probably make that like that, and then I got a 50. Right? So the thing about that is, it's supposed to be that if you've got green candles over here, that's a buy, right? But if it's the other way, if you've got the 50 and you got this 25, right, like that, then if you've got red candles down below, that's a sell, because the 25 being below the 50 is pushing the market down. the 25 being above the 50 is pushing the market up. So hopefully that makes sense. So I'm using a lot of indicators, but that's really it. So I'm using also, but not really. I mean, it's on there, but I don't know. I'm not sure. I mean, I'm sure I know it's useful, right? But I haven't been paying too much attention to it. The VWAP. I know that's popular. But and then I'm using the candle closing thing to let me know. And the TSV. The TSV is supposed to. I mean, it's what's cool about it, and what's different about the TSV, the what's it called, the time segmented volume, as opposed to. Here's the thing, though. Like, so the timing of it is okay. So first indication of a reversal for me, I don't even look at the candles. I mean, I do, but is the stochastic oscillator. And then but what I also do is I also look at the TSV, and I'll see what the volume is doing. It'll show like heavy volume, light volume, up or down. And sometimes it'll show you some good things, like that you can sort of get ahead of the curve, literally. And so let me just show you what it looks like, my screen here, so you can see what it looks like. This is what it looks like. Let me there you go. So this is what it looks like. This is the what do you call it? The market profile going sideways. Okay. That green, I just changed the color, so I'm trying to remember. The green is the 180, and the red is the 365. So we want the market to be up here if we're looking for a buy, so it pushes up. What we want, this is actually, I wouldn't trade this right now, which you can see it's in a consolidation, so it's really not even trading very good. And the reason is because we want this 180 line to be down here below the 365 line, because that's where the market is, down here, right? And then we'd be looking for a sell, and then we'd be looking for indicator. And let me show you what's good about this. See that? You see how that triggers right at the point of where it reverses? You see that? It crosses right there. But don't want to take the trade there. You want to wait a second. Okay? And you can look and see this relative strength index going down. Sometimes you can see the TSV reversing and coming down. Sometimes you cannot. And sometimes you can see the moving averages move, but those are really laggy. So sometimes you just have to look at the stochastic oscillator and the candles, and also making sure that you're liking what you're seeing with your averages. So like in an ideal world, we would want the 365 up here, the 180 down here, and then the 50 below that, the 25 below that, and then the candles below all those. That would be the ultimate sell. And then we'd be looking for, a signal here. We'd be looking for You know, we'd be looking for whatever, like this. We'd be looking to enter like right here. Sorry. Right here. And you know, so what you want to do, what I've found is the best thing to do is make 100% sure that you know that it's going down, and then just go big or go home. Now I know it's easy for me to say because I'm using demo money. Now before you laugh, let me just say that I do try to, you know, give it the same significance. Obviously you can't, but whatever. Practice with demo until you know what you're doing. But anyway, so basically what I'm trying to say is you want to make sure that you're have as many confirmations as possible. There's like 25, you know, I mean there's so many currency pairs, and then you got I don't know how many stocks, and you got endless things to trade. So look for your best opportunities. You know, do like a top 6 or a top 12 or whatever, and then look and see where your best opportunity is. Make sure, and then go heavy. But cut quick. You know, if it's going against you, right? Obviously you're wrong. You want to catch it on the momentum. So obviously you're going to have some pullbacks and stuff like that. But don't sit there and ride a negative, you know, loss. Cut it, and just, it is what it is. Last thing I'll say is when you do take profit, don't double dip. Do not double dip. Because what will happen is, most likely, especially if you're going heavy, you will wait, you know, 20 minutes to get profits. So say you get, you know, a couple $100 in 20 minutes. And literally, if you go back to double dip, if you see, oh, it's still moving, you know, down, or it's still moving up, and you're like, let me get back in, let me get some more. I know that you might say, well, that sounds stupid, but you can give it back in 2 seconds what it took you 20 minutes to get. So no double dipping. Just move on. If it's still moving, whatever. Hey, look, you took your profits. You got paid. Next opportunity, right? It's just like in a sport, right? You make a play, or you don't make a play, or whatever happens, and you move on to the next play, right? Because you got to stay focused, keep your head in the game, and look for that next opportunity. All right, that's all I got. See how long it went. Almost about 30 minutes. Hopefully this was helpful to you guys. And, you know, mostly they say, you know, if you teach, it'll help you learn and whatever. So hopefully that's good for me, and maybe it'll help somebody also. And anyway, thanks so much for watching. Y'all have a great day.